I get a lot of questions from people that says that, hey, my investment is supposed to perform about say 8 to 10% per year. I have invested for 1 or 2 years. Why isn't my portfolio performing as it should, like 8 to 10% per year? Now, in this video, I'm going to share with you what you should be thinking instead when it comes to your investment. Now, the first thing you have to remember is that returns from any investment are not linear, which means that if it says that it's expected to perform 8 to 10% per year, it doesn't mean that every year if you have this figure. Because if it does, then you should be very afraid. It's likely a scam because they can manipulate the returns percentage to fit in the promised range of 8 to 10% per year. So to illustrate, to explain this point more clearly to you, let me show you this applies whether you are investing in stocks, whether we are investing in unit trust or even Bitcoin. Now, what you're looking over here is one of the best performing stocks anywhere in Bursa Malaysia, the KLSE, and that is My EG Services Berhad. Now, for the past 5 years, meaning that at this time of recording is early 2018, so we are saying that from 2013 to 2018. Now, what is the price of My EG stock in 2013? You have 0.13, okay, over here. And in 1 year later, in 2014, you have over here of 0.13 to 0.44, so that is about 200% gain. And from here to here, there is about 100% gain. And from here to here, I don't know, maybe it is another double, 100% gain. And from here to here, it's only about, I don't know, less than 10% gain. And from here to here, you know that there is another probably 50% gain. So you see that even for the best performing stocks in the entire KLSE, you have returns that are non-linear. So, but for the past 5 years, if I were to have to make a calculation to say that it starts from 0.13 and it ends up with 2.4 per share in a period of 5 years. So what you have is about 80% per year gain. So from here to here, in the past 5 years, My EG, the best performing stocks in KLSE, you have about 80% of gain per year of CAGR. So that is what it means. But you see that not every year you have a consistent 80% gain. All right, you have, yeah, some years is really good. It's still 200%, 100% gain, 100% gain. And in 2016 to 2017, it only has less than 10% gain over here. Okay, maybe there's 2 or 3% even, right? So this is what I mean that the returns are really non-linear. So let's look at this chart, right? Let's look at this. Okay, this one is actually Kenanga Growth. Okay, Kenanga Growth Fund. Okay, this is something Kenanga Growth Fund. Maybe you want to maximize this so you can really see it better. Now you see that in the Kenanga Growth Fund, from 2013 until now, so you see here is 26%, 9.3%, and 21%. And in 2016, it has 0% gain over here. In 2017, it has 26%. So you can see that the returns are really non-linear. But if you add it up all together, okay, add it up all together, let's pull up a calculator over here. Okay, a calculator. So what you have as an average, so we have 26% plus 9.3 plus 21% plus 26% and plus 0 or plus 1%. Okay, so what it means that is you have an 83% cumulative gain for the past 5 years, you divide that by 5, so it's about 16 to 17% of gain every year. But the thing is, in unit trust also, you don't see that kind of 16% gain every year. Some year you have 0, some year you have higher, 26% and all that. So if you invested long enough, so what it means that 16% gain per year is not impossible. It's just that you have to stay invested for a very, very long time. If you enter it here, let's say in 2016, and you exit by the end of 2016, you have 0% gain or even less because of the sales charge. And the next thing I want to show you is this concept is also applicable for Bitcoin. You see, if you see that the price of Bitcoin as of time of this recording, let us start with in 2013. Bitcoin price is only 13 ringgit. Then if you jump up to 700, jump up to drop back down to 300. So this is a 50% loss. So I don't know, this one could be like 1000% gain. And this one, there's another, I guess it's about 50% gain. Again, this go up, but this one goes down. And this one again, double, 100% gain. And then it shoots up. Okay, what kind of gain is this? Just within 1 year. Can you see that? Right? This within 1 year. So what I'm saying that is that returns are always non-linear, and this is applicable whether you're investing in Bitcoin, unit trust, or even stocks. But the thing is, when it comes of these three instruments, you know that, okay, if you are holding something in Bitcoin, yeah, it's good. If you hold it until now, it goes up. And of course, if you hold a winner stock like mine, it also goes up, something like that. But the other thing is, when it comes to a unit trust or fund, you know that a unit trust or a fund has a lot of stocks under its portfolio. And again, this does not represent what it's going to perform, because the portfolio of the fund itself can change when the fund manager buys certain stock and sells certain stock. Unlike when you're holding a single stock, when you see like a company like X or X, Zox, right? So what it has over here is that for in early 2013, its stock price is actually at 0.4, right? And it just keeps on dropping. And at this point of time, there's no guarantee it will come back up, but there is a spike over here. See, when is that? The spike happens actually in 2016. So except the spike that happened, and it drops back down just in a very short time, you know that Zox is really on a downtrend, right? It's on downtrend. So when you're holding a losing stock, there's actually very hard for you to recover. It dropped from 0.4 to about, I think, about 0.1 over here at the point of this recording, right? So there's no way for you to recover, but you know that for any mutual fund, or any fund for that matter, there is still a way for you to recover, because again, a fund consists of a basket of stocks. As long as the fund itself is not the worst performer compared to its peers, then it's likely there's a chance for it still to perform, go up and up. But when it comes to a stock like this, a losing stock like that, then it's unlikely, unless there's a major good news, major revenue, major new things coming in for the company. Then this is what the trend that you see. That is the risk of holding a single stock, right? Imagine if you have 100,000 invested in a fund, 100,000 invested in these stocks. Of course, there's a 50% chance you would actually be able to tag on and invested in a stock when it's still at this stock price. Or it could be equally likely you will be invested in something with this kind of trend of the stock price trend. Okay, so again, to wrap this up, like I say again, the returns of any investment is non-linear. So whatever 10%, 16% per year, it's just that you have to look at it from a 3 or 5 years period of time and the average of that, because some years you might have negative or zero return, some years you will have better, a very double-digit return, and average it out, it comes about what, 10% per year for the past 5 years every year, right? Including the downtrend. So for me, that is good enough. So this definitely, if you like videos, you like lessons like this, okay, applicable in whatever investment you are looking for. Please click on below, above or below this video, click on subscribe. You follow me for more lessons like this on my YouTube. So stay tuned for the next lesson. This is Liu.